Hi, and welcome to the Professional Amateur episode 2. This one's just kind of a quick test of my new phone and its capabilities. I'll jump right into it. So I just wanted to go through a few web pages today and kind of, if I do actually get this up, I'll put it in the show notes. There's a lot going on in the world today. This episode is going to focus on finance. So what I have here is an article from CNBC that's published a couple days ago. U.S. deficit surges 25% in fiscal year 2020 and is 1.1 trillion over the past year. That's a lot. And I'm just going to read the key points. So the budget deficit, I'm going to try a cool highlighting tool. Neato. Okay, we'll erase that. The budget deficit for the first 4 months of fiscal 2020 is already at 389 billion, the Treasury Department reported. That's a 25% gain from the same period a year ago. That's not going to stop. I think it's only going to keep going up. Over the past 12 months, the gap has been nearly 1.1 trillion as the national debt has swelled past 23 trillion. So we're in the exponential phase of debt collapse. So this is when we're probably going to see within the next 5 years the national debt shoot from 23 trillion up to 30, up to 40. It's hockey stick exponential at this point. So how can we do this? How can we just keep spending money? I want to show you a really quick article, balance, about how the Fed monetizes the U.S. debt. So what is monetizing debt? Oops. Why the nation's central bank is making the government debt worse. So this was updated a little while ago, but just shows you kind of basics how the government gets away with this. So a nation monetizes its debt when it converts debt to credit or cash, freeing up capital that is locked in debt and putting it into circulation. The only way a country can do this is with its central bank, which purchases the government debt and replaces it with credit. So credit. What's credit? In turn, the central bank puts the debt on its balance sheet. So the Federal Reserve, also known as the Fed, is the central bank of the United States, and it monetizes U.S. debt when it buys U.S. Treasury bills, bonds, and notes, which are all different types of government IOUs. And it's basically an IOU to pay you back in more IOUs later. So it's kind of a shell game. Anyway, it doesn't have to print money to do so. It uses credit to its member banks that hold the treasuries, and then it puts them on its own balance sheet. It does this through an office at the Federal Reserve. The credit is treated just like money, and though the Fed doesn't print, even though the Fed doesn't print actual cash. And it goes on, so I'll post this in the show notes. But basically, the Fed is able to counterfeit credit as money, has an endless supply that is its digital. It's made up out of nowhere. I mean, absolutely nowhere. So I think it's very important for all of us as American citizens and everyone else in the world who's using the dollar as a reserve currency to understand that it is, at this point of the game, we're creating money out of absolutely nothing. And there is nothing backing it except for the full faith and credit of the United States, which is basically they issue bonds that promise to pay you back in more IOUs later. So we issue IOUs that are to be paid back in more IOUs later. We've gotten away with it for a very long time and have the world's largest military and, a lot of political clout, obviously technological clout and all these other things. So my point is that this will work. All of a sudden it stops working. And I think we're in the exponential phase where people are going to start noticing that we're just printing money willy-nilly and not printing it, electronically creating it out of nothing in order for our government to continue functioning. So we're going to see deficits go trillion-dollar deficits and more per year. And nobody can stop this. Politics can't stop this. This is not something that one party's going to stop and all and make it better. It's just basic math. So anyway, let's skip over to, so now that I read a little bit about, the Fed and how it monetizes, let's go and look at the Fed's balance sheet and that's from this part here where it says it issues credit to its member banks that hold the treasuries, and then it puts them on its own balance sheet. So, what does the balance sheet look like lately? So, I don't know if anyone's been keeping track, but I have here from the St. Louis Fed the Fed balance sheet over the past year, and this is starting in mid-September of last year, and you may have heard about the repo crisis. That's basically at this point, in short-term interest rates went through the roof for overnight lending in what they call the repo market, which basically means that people don't trust to lend to each other. So basically, the Federal Reserve took that market over, and you can see in this chart. Try to get that out of my face. How they took that market over. So there's a hockey. Basically, you see up until this point, September 11th, 2019. Then boom, their balance sheet shoots up. Well, what are they doing? Why is this? Why is the balance sheet continuing to expand? Because they're monetizing. They're buying up assets. What are they buying? It's a little bit convoluted, right? So probably mortgage-backed securities, and you can look at that. They never went away. Mortgage-backed securities from the 2008 crisis never went away, still being cycled around as collateral in the banking system. And treasuries, outright purchases of short-term treasuries. And also they are guaranteeing, they've basically taken over the repo market as well. So what we're seeing here is central bank intervention in the market to grand scale. Now, how long this can go on, probably, who knows? I'm not saying it's all going to collapse overnight or something like that. That's probably not going to happen. But what I am saying is that we're in a phase where, as you can see, even here recently, they tried to unwind up here. We're trying to taper and come back down. And then as of January 22nd, the coronavirus stuff kind of hit China really hard and has pretty much cratered their economy. They're ground to a standstill. Steel production's down. They're all, like, most of the country's on lockdown. So that's obviously hit production pretty hard, and those supply chain issues are going to wind up trickling through into the U.S. economy, where we use, goods that they actually produce to produce more goods here. Same thing's happening. Closures are hitting Japan now. But in any case, you can see how just even recently here, they, as of the 22nd of January, they actually had to increase the balance sheet again and continue purchasing what, I don't know. I'd have to go into the details. I can probably do some sleuthing and find out more, but there's other people who've done really good research on this, which I'll also post in the show notes. So my point here is just basically to show that, and the last thing is, so what is this? Is this inflationary? Hi. Can you say hi, Alia? Hi. It's my daughter. I think this is inflationary. I think it's super inflationary. Gold and silver going up over the short term, and what else is popping right now? Cryptocurrencies. So let me run over to cryptocurrencies really quick. My last slide to show you is cryptocurrencies. So this is just cryptocurrency. This is Ethereum, priced in US dollars. But if you look at all the different ones, right now it's at $281. And I've got the chart up here from, let's see, September. So starting when the Fed basically took over the repo market in September, we had a bit of a downtrend in a lot of cryptos. And then starting in December-ish, all of a sudden we have a skyrocket. Let me move my picture over here. We've got it skyrocketing. Use my little boom. So what's causing this? Okay, I'm not going to be overly simplistic, and say that there's one cause of this. I think some of the cause of cryptocurrencies exploding right now, especially as of December into this year, is outright monetization of the national debt. I think that has something to do with it. I'm not saying that's 100% of it, but I think that's a good portion of it. So, I'm not telling anybody what to do with their money. I'm just saying you really need to be aware of what's going on in the market right now. It's crazy. The moves are monumental. And if you're invested in cryptocurrencies right now, you're probably doing very well, or gold and silver and other defensives. I think a recession's coming, obviously. I know they've been telegraphing that for quite some time. But the Fed's moving to push the balance sheet up, and I think to stave it off. And I don't know if they'll, maybe they will. I hope they do. But history doesn't any other country that's monetized its debt and it's basically created money out of nowhere has not been able to maintain growth. And Japan is the biggest case in point. So if you look at Japan, since their huge stock market bubble in the early 90s and that exploded, it's gone down ever since then. And it's never even reached previous highs, but they have been also creating money out of nowhere, monetizing their own debt for the past 20 years. And their economy has basically stagnated and their whole country stagnated. So that's where we're headed. Hopefully not a massive catastrophic collapse, but best case scenario, 20 years of a stagnating economy, which sucks, which isn't good for anybody. Anyway, I'm not a proponent of one cryptocurrency over another. There's a billion of them. I'm not a big fan of Bitcoin per se because it's just the biggest, most popular one. There's a lot of other ones out there, and I'm not proposing that you go out and buy cryptocurrency unless you do your due diligence and do some research and you think it's a good investment. It may or may not be for you. And I'm not giving any investment advice whatsoever. I just thought that it might be good to do an informational video on what's going on in the world today, and the latest debt figures and what's going on in the crypto markets and the monetization of our national debt. Well, they haven't outright monetized the national debt yet, so that's a misnomer. But I would say that it's obvious that the Fed's buying short-term treasuries and taking over the treasury market and rolling those over constantly, which is kind of tantamount to monetizing the debt, which they said they would never do, or at least Ben Bernanke, I think, said they would never monetize the debt, and here we are 10 years later monetizing the debt. I think it's bad for the long run. Anyway, that's all I've got for today. Hope you enjoyed this. If you like it, share it, and I'm going to try to close the video here. Appreciate you listening, and have a good day.